This is Eric Mwatha with Mwatha.com, going into the week of January the 15th, 2012. We are going to have a short week, trading week. Let's take a look at what the charts are telling us going into that new week. We look at the Dow Jones, and we see that this week it's had a nice follow through on the second trading week of January. But if you take a look at what the price is doing, we see that this Dow Jones is registering incremental highs. I think we're at a 5-month high, but if you take a look at the RSI, you see that the RSI is not following through, so the technicals are declining as the market seems to be moving higher. That net tends to be a negative, and we'll see how that's gonna shape out. Again, if you take a look at the Dow transports, you'll notice that they are trading in a what seems to be like a coiling type bearish flag here. More than likely, my thinking is that we might trade in this area, but eventually we break down and pull to the downside for a while before we probably recapture these levels. But this seems to be like a bearish wedge, with the conclusion being that we're going to break this to the downside. If you take a look at the RSI on the daily for the Dow transports, you see that we are back at this area where we've been having resistance levels, and so we've hit that level. That tells me to be open to the idea that the market wants to pull back going into the third, fourth weeks of January. If you take a look at the QQQ, you'll notice that we've had this problem over the last since March of last year. Actually, since March of last year, QQQs can't seem to stay above this level for a considerable length of time. So we are back at that level. If we can break out, then obviously we are going to be either trading in this range or we are going to be pulling back. But this has been an area of resistance, confirmed resistance, going back to March of 2011, and that remains the case until we get a breakout. We must look at this as a resistance area. Take a look at the QQQ again on the daily. You'll see that this is a confirmed area of resistance. The market seems to hit this level every time and pulls back. It pulled back here, and also could possibly pull back here unless we get a breakout. If you take a look at the RSI for the QQQ, you'll notice that it too is showing that we've come to an area of resistance. Here, this area has been a resistance area as far as the QQQ is concerned. So I would look to this market to pull back going into the third and fourth weeks of January. The airline index, what I see here is basically the RSI is what I was looking at here. If you take a look at the RSI highs line, the highs, this green line here shows you where this instrument seems to be finding trouble. So we've hit that level there. Either we're going to pull back or we break out and have a strong rally. Right now we are showing resistance, so I'm going to say that pullback is probably what's going to take place. If you take a look at the biotech index, this has been one of the great, you'll find lots of stocks in the biotech index have been having a good run over the last couple of weeks. A nice place to hide some money if you find some breakouts there. The only problem here that I find with the biotech index is that now, after a nice run, we are back at this area, which happens to be the backside of this red line here. So we've broke down here, worked our way, now we're on the backside of this area. More than likely we are going to see this thing stall around here, and we're going to see a pullback, which is consistent with my analysis for the rest of the market also. If you take a look at the Dow Jones US Medical Equipment Index, now this index is showing us price top lines resistance. If you take the highs going back all the way to May of 2011, the highs of summer, you find that it's through a straight line. This black line is where we are trading at right now, with the resistance right there. It also happens to be an area where you're going to see that the RSI is hitting resistance, that being the high, and also now being confirmed with that turnaround there. So that tells me to look at this market again. Lots of signals that this market is probably seeing short-term highs. Take a look at the DRG, which is the pharmaceutical index. Again, showing that there's resistance coming in the market. This black line here was support on the upside, but once we broke down here, it was resistance once here. We've come back, we're banging heads with this side here, can't seem to hold, we seem to be rolling over. That confirms to me resistance. Also noticed resistance coming from the highs, weekly closing highs. That area has been an area of resistance, so we have double resistance coming from the underside of this black line here, and we have top line resistance from weekly closing highs. Net conclusion is that more than likely we see a pullback coming in this pharmaceutical index. Let's take a look at the IYR, and what I want to spend a minute here is the IYR can seem to move above this area. This seems to be an area of resistance, also happens to be an area where was a breaking point here. Once we broke through the black line here, this break right here has been an area of resistance in this market. So unless we get a breakout, my conclusion is that we are going to be finding it difficult to move higher. Also take a look at the fact that the RSI is now showing right there double tops on the RSI. So again, if you take a look at the highs, this line is connecting the highs, and you see that we are forming a double top there. Again, an area of resistance in the sentiment tells me that we should be looking for this market to be going lower in the coming days and weeks. The SOX semiconductor index, again, same scenario as the IYR. You'll see that this was a break point here, and this area has turned to be this former break point right here. Once we broke down and headed lower, this break point has become an area of multiple resistance as far as this market is concerned. Multiple resistance right there. So that's very easy to see that that's going to be a challenge unless we break out. Right now we are showing a down day confirming resistance. If you take a look at the CRB index, what I wanted you to point out here is take a look at this line here which connects the highs. We try to hold above that line for a few days, but we are back below that line, again confirming resistance. Don't forget we have a declining 50-day moving average, so net that's a resistance area. And now also notice that the RSI is showing that this area here confirms that break point there. So we've come back over many weeks and months, and we are forming a double top on this line here, this line, the turquoise line. So that is an area of resistance. You look for markets to pull back. Now the ETF that tracks a CRB is the GCC, and you'll see it's showing the same scenario here with a what seems like to be a double top on the RSI, and also can seem to move above the declining 50-day moving average, just like it struggled here, and we had this dropped fresh 52-week lows, and we are finding resistance here. We could be setting up for a move lower, probably even taking out these lows here, as far as, which tells me commodities are really struggling. Now if you take a look at the crude oil market here, you'll see that, and I've talked about this for about 2-3 months or 2 months or so, the fact that we can't seem to hold above the gray line. Every time we bump above this line here, we can't seem to move above this line, can't hold a breakout above $100 for whatever reason. So crude oil is showing a breakout attempt that failed. Also you'll notice that this also happens to be shown by the backside of this red line forming multiple resistance. So this can't seem to move above this level here. Again, that is confirming a market that wants to go down. Now if you take a look at the USO, which mirrors the crude oil market pretty much, you'll notice that again the red line, this red line here, is where we can't seem to close above this level, can't seem to stay above that, can't seem to hold a breakout point above 39.09. So we tried to break out and we were rejected. Again, look for this to be a resistance, a point in the market, and probably to me the best way to play this is to stay short and to play the short side unless this market can hold breakout levels. Take a look at the agricultural index, the GKX. Again, notice take the highs there and there, draw a straight line. We hit that level there, so that's resistance confirmed. Net look like we're gonna be going lower. Another agricultural sector looking weak, or another commodity sector looking weak. I talked about this in a prior video. INP forming resistance as is shown right there. I'm sure you're aware of the reasons why. Again, I also talked about the EWZ in a former video here today, where I was giving you some stock ideas. You'll see a resistance point there. So just reiterating what I said earlier. KOL, notice that even though it's had a nice, you can say it's had a nice bounce since this October lows, but if you draw a line here, you'll see that we are at resistance right there. Also can't seem to move above the black line, which is the RSI top lines. Again, lots of resistance points in this market. My feeling is, again, another instrument here, the coal market, which is part of the commodity space, is going to be pulling back, and I think it's going to pull the stock market lower. Take a look at cotton here. You'll see that we have a declining 50-day moving average, have failed to hold the 50-day moving average before, here and here, and we seem to be here trying to hold on for dear life. But if you take a look at the RSI, you'll see that the RSI had stalled here. It corresponds with that RSI level. We are at this point here, which corresponds with this RSI level. Seems like a double top. Conclusion here is, here's another market that is giving us sell signals. Take a look at the soft commodity ETF, the DBA, confirmation of resistance, seen very clearly the RSI right there. That RSI double top confirming resistance, hence the reason why we are pulling back. Can't seem to hold the 50-day moving average. That tends to be a bearish setup. Take a look at copper, which is trying to rally this week like the rest of the market is, but you'll notice that we are now coming into contact with the declining 150-day moving average, and also this area here on the RSI has been an area of trouble for copper. So to me, that move in copper might be over short term for now, and I also look for this to show us a pullback in the coming days. Probably might last into the coming weeks. Let's take a look here at the OIH, again the oil service index. What I wanted to show you here is another area showing resistance. If you look at this price channel top lines, can't seem to move above that. We have declining 10-week moving average, declining 33-week moving average. Net conclusion here is, here's another market that is not showing any strength. Let's take a look at gold. Now notice that gold is trading below its 33-week moving average right there, right? Trading below its 10-week moving average, trading below its 13-week moving average. So gold has yet to prove that it can rally, even though it had a nice week this week. Really hasn't changed the fact that it's trading below its long-term moving average. These moving averages were support on the way up, and they could easily turn into resistance points on the way down. So let's watch that. As you can see, we just hit those levels this week here, right there, and we can't seem to move higher. So gold still remains suspect. Take a look at gold as based on its 200-day moving average, which is right there. We haven't been able to recapture the 200-day moving average since the last couple of weeks of December. We'll see how things shape out. Right now, gold is at a no man's land. You don't want to buy it, you don't want to sell it. You want to watch for it to either show continued resistance or for it to find new strength. Let's take a look here at the Canadian dollar, and like I talked about this for a couple of weeks here, the fact that the Canadian dollar has been my best signal that for a market that wants to go down. You see that we've been hitting this level here lately. Straight line can't move above that. We have a 50-day moving average that was trying to rally but is now pushing lower. All right, that's bearish for the Canadian dollar, which goes inverse the US dollar. And then also notice this multiple RSI resistance points have been confirmed. Net is we might challenge this line here on the price, might break down below that, and that might lead to further movement lower. Now if you take a look at the dollar, which is inverse the Canadian dollar, you'll see that we are holding above 22.49, and as long as that's the case, the dollar continues to push higher on a week number 2 breakout follow through, which is very good for the dollar. Take a look at the dollar from the weekly chart. RSI, from the monthly chart view, you'll notice that we are trying to break out above this level here, which is reason why the dollar is showing strength, and we are also moving above 50 this month, which might confirm that the dollar is going to be having a nice couple of weeks this January. Take a look at the euro at 52-week close here, might close at a fresh 52-week close. So there's really no reason to be celebrating or be looking for the market to be going straight up because of weaknesses in some of the things that go with it, with the market. The dollar is rallying. That's going to put a lead on any rally attempt. Now take a look at VIX. VIX is broken here with this crossover the moving averages, like I've been talking about for a couple of weeks, but we see that now the VIX is trying to put a recovery formation on its weekly RSI with this double top formation, double bottom formation. So that might be where it starts to repair the chart. If this can hold and it moves higher, then this price is also going to be moving higher, and this might be the lows for now. Otherwise the VIX seems broken, but it's trying to repair itself. Let's take a look at the French market here. You'll see that French market, like most of the markets I've shown you here, resistance everywhere. We can't seem to hold above that as far as the French market is concerned. Let's take a look here at the German market, and you'll notice that this area here, general area somewhere around here, we can't seem to hold. Every time we hit that level like we did here, here, and here, can't seem to hold. Also notice that the RSI, once you take the highs there and that high, draw a straight line, we are forming a double top on the price as far as the daily for the German market is concerned. So again, lots of resistance, upside resistance, which leads me to think that the market is going to be going down in the coming weeks. Also take a look at where the German market ended the week, just above 50, and you know what that means as we move back below 50 whenever that happens. Let's take a look at the London market. I believe that's the last chart. The London market, on the other hand, again, we have this very clear break point. So once we broke down there, we had this huge drop. So this area here has since then turned into a resistance once here in early October, and we've found it very difficult over the last 2 weeks to trade above this level. So this is an area of confirmed resistance, and you'll also see that it is confirmed by the RSI, showing us again another double top. Net, my conclusion is that we are looking at a market that unless the market can break out, we are looking at a market that is going to be heading lower in the coming days and weeks. This is Eric Mwatha with Mwatha.com. Peace and blessings.